Hello everyone and welcome to Day Trader S&P 500. Today is Friday, November 3rd, 2023. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel. I want to get our YouTube subscribers caught up with what our newsletter subscribers have had. It's been about a week, so without further ado, let's get into it, okay? Here is the S&P Cash 500 weekly chart. There's the all-time high back in January of 22. There's wave A down with the parentheses. There's wave B up. You can see symmetry between A and B within one trading day, and they were both Fibonacci 8 plus 1 months long. Okay, there's A down, there's B up, there's the wave C targets, there's the one-to-one relationship, and further ones all the way to 1.618. By the way, third waves are usually at least 1.618, could be more, 2.618, 3.618. We'll leave these up there for now until this develops further, but you can see this C wave down has a 1 down, a 2 up, and a 3, a 1, 2, 3, 4, 5 for 3. And you can see the trend line drawn from the low of wave A to the low of wave B of a lesser degree of trend. Goes through here, went through support, and support becomes resistance. Right now the market is bumping its head up against that what is now a resistance line. We'll see if it holds. Okay, so that's where that is. That's the S&P weekly, the cash. Here is the daily. By the way, this weekly here takes us to that B wave high of 46.07 in July. So we'll pick up from there in the daily, and you can see here we've got a 1 down with a circle, a 2 up, and then we've got a 1, 2, 3, 4, 5 down for a 3 with a circle. Here are the wave 4 targets here. Okay, you can see a nice little move up there, 1, 2, 3, 4 days in a row. It's right at the 50% retracement. Okay, the 618 is up here above the wave 1 high for this wave 4, so it cannot go there. We have an alternate count that labels this entire decline as just a 1 as opposed to the 1 here. Okay, so if that is the case, the alternate wave 2 could attain these higher retracement levels, okay, but it cannot go above the start of wave 1, which is 45.41 on September 1st. So that's what we're looking at on a daily chart of the S&P 500. We'll see how this plays out. It's a nice perfect move up to the 50% there, which is again up against that trend line there. Let's go to the NASDAQ. This is a daily chart of the NASDAQ from the all-time high. The NASDAQ topped in November of 21, where the Dow and the S&P topped in January of 22. You can see an A wave down, a B wave up, and we're in wave C down. In wave C we've got a series of 1s and 2s, so we're looking at third wave down at multiple degrees of trend. This A can be called a 1, this B can be called a 2, this is a 1, this is a 2, this is a 1, this is a 2. So it's 3 degrees of trend, and you can see on this one here we've got a 1 down, 2 up, 3 down, 4 up, and a 5 down for a larger degree wave 1. Okay, so that's unfolding, and that 2 can go all the way up to the beginning of wave 1, but it can't go across it. Okay, here's our wave 3 targets in parentheses here, wave 3 in parentheses targets. Okay, the 2786 is the 2.618, the 12070 is the 1.618. Note the alternate count in blue, and remember the S&P, we had an alternate count in blue, and it was eliminated as this wave 1 high was taken out. Okay, in blue, this wave 4 low cannot go below this wave 1 high. So 12,269, a move below that will eliminate the alternate count in blue. So we keep that up there for you bulls so you have some hope. Okay, but again, a normal 5 down, 3 up, 5 down, A in parentheses, B, C in parentheses, is a 535 is a normal correction in a bull market. So we'll see if it goes any further. This wave C has just begun, and as we can show you guys, well, we'll get to that later. Okay, I think I got that. No, we'll get to that later. let's go to the Dow. Okay, let's make that full screen. There we go. Let's get all the numbers into the picture here. Here we go. Okay, the Dow, we've got a 1 down in parentheses, a 2 up, and again a 1, 2, and this looks like a 1, 2. Okay, so we got third wave at multiple degrees of trend. Here is the third wave in parentheses target. Okay, and it hit right near the 1.618. Okay, right here. We had a 1, 2, 3. Okay, if this 4 is up, it should not go above that wave 1 low, which is 30.029. So that's the make or break where it's wrong. That's where the alternate comes in. Similar to the S&P, the alternate is a 1 down and a 2 up. So it's a 1, 2, and then actually it's a 1 in blue, then a 2. That's the alternate. Our wave 3 targets again here is the 1, 1, 2, 7, 2, 1, 4, 1, 4. 1618. I started using the 1272 and 1414 multiples a couple of years ago because I noticed the extensions were hitting between the 1 and the 1.618. But if we're into these third waves, it's more common for the third wave to hit a 1.618 or a 2.618 or a 3.618. So we may start eliminating those in between the 1 and 1.618 and just start listing the 1.618, 2.618, etc., etc. Okay, so that's the Dow there, and we want to get into the US 10-year Treasury. Okay, there we go. Let's do this. You can see this wave 1 up in October of 22 was from the March of 2020 low. Then we had a wave 2 down, which was a 382 decline, percentage decline. There we go, get those out of the way. And from there, let me see if I can straighten this up a little bit. There we go. Okay, from there we've had a 1 in circle, primary degree, 2 down, and there's 3 up. We had a target of 5.1%. It hit 5.021, pretty close to a direct hit. And then you can see we've got the wave 4 down decline happening now off of that 5.1, I'm sorry, 5.021 wave 3 high. Here's the 4 targets. You can see a 382 to 500 and the 618. They all stay above the wave 1 high, which is a requirement. So this 4 is unfolding. Wave 4 down will give way to wave 5 up, and the larger degree wave 3. This is a 1. It's a little bit hard to see now because we changed things around. Let's move this around a little bit. There we go. Okay, this is 1, this is 2. 3 equals 1 at 7.255%. That'll be the next longer term one. Depends, I guess, intermediate term target. Once this 4th wave decline is complete, we'll do the math and figure out where 5 equals 1. And wave 3, at this degree of trend, there's the 1 up, there's the 2 down. This is cycle degree. Cycle degree 3 equals 1 at 7.255. That will be the minimum target for wave 3. Again, that's a larger degree of trend. Okay, let's get into gold. Where is our gold? Gold. We'll do it like this. Okay, and we'll look at gold. There we go. There's our gold. This goes pretty far back, so we're going to have to extrapolate this and squeeze it down and get back into there. Okay, going back to 2015, we have a 1 up in parentheses, a 2 down, a 3 up in parentheses, a 4 down, which was a direct hit on our target within 5 points there. And now we're in a 5 up. Okay, from this 4 down, we have 5 waves up to make 1 with a parentheses, a larger degree of trend. This is most likely a 2, and then we'll have 3, 4, and 5. Okay, got triggers and targets. Our paid newsletter subscribers are loving the triggers and targets. We're giving upside and downside, and the triggers are hit, and once the triggers are activated, the targets are achieved, and it's all math. Again, I always say it's just math, and I'm reporting the numbers. So the numbers say if we get above 2081, our near-term target is 2147, and you can see our declines here for wave 2. I didn't put the 2 in there, but I think I will now. Okay, we'll put a 2 here. Bear with me while I catch this thing up. There we go. Okay, so we've got a 1 up, a 2 down. We ought to make this larger wave 5. Okay, there were our targets right there, and the actual hit at 1810, which is near the 618. You can see it right there. It's between the 618 and the 500 retracement. That would have to hold. Again, this should not go below that fourth wave low down here at 1614. That should hold. Okay, so that's what we're looking at with the gold. Let's get into the ES. Okay, here is daily chart of the ES. Again, let's do this so that we can see from the B wave high. Okay, you might remember that from the S&P. We have a 1 down, a 2 up. Then we get a 1, 2, 3, 4, 5 for the 3 with a circle down. And then there's our triggers and targets, as I was mentioning earlier. Our upside trigger of 4185 was hit, activated if you will, and then these targets are being achieved. Okay, so we got a downside trigger here at that 4122.25 low. By the way, there's an open gap right here at 4136.50. That gap will be closed. It's unusual for gaps in futures to remain open for very long because they're open 23 hours a day. Okay, they're only closed for 1 hour, and they close Friday night and open Sunday evening. But anyway, here are the targets. You can see the 382 and the, let me make this bigger. There we go. That's a little better. There we go. And that's the 3 targets over there. But we've got to hit this trigger here first, okay? So we're in this retracement up. Again, the alternate count, just like the S&P, is instead of this 1 here, it's 1 here in blue. And then 2 can go up to these targets here. We'll have to see how that plays out. But in the primary count, again, wave 4 up. There's the wave 4 targets right there. Cannot go above the wave 1 low at 43.50. And it's sitting right here about 20 points below it right now on Friday morning, just before the Fed announcement. A move above here activates the alternate count, and there are the targets there. Okay, that is the daily chart. Let's get into the hourly. Okay, the daily chart for reference here, we had a 1 down, 2 up to the 915 high. I believe this takes up, no, this goes from the 1012 high. Okay, so we've got that high right there. Okay, just the most recent 5 waves. You can see here, this is a little messy. Might clean that up on a report. You can see those targets there for the most recent 5 wave decline. Okay, by the way, that hit within what is it, 1 point, less than 1 point of our target. You got direct hits all over the place here. We can go back, but we don't really have time for that. Let's get into our reports here. We'll do the pre-market close from yesterday. This is the ES. Got a turn date coming up on 11/16. Okay, here we go. Updated wave count. Here's from that. This is the daily from that July wave B high. A 1 down, 2 up. There's the 3 down. There's the alternate. There's the trigger. There's the open gap. There are the targets for wave 4. We'll see if the alternate is kicked into play with the move up above 43.50. We'll see if that plays out. Okay, there's all of our targets, and you can see where the alternate count kicks in. But by the way, the alternate count is more bullish near term because it allows for a move up there, but it's way more bearish long term because this is only 1 here at this degree of trend in the alternate count, where 1 here, the same 1, is way up here in the primary count. So the alternate count looks more bullish, but it's only short term. When this turns into a 3, the 3 for this blue will be way below where this 3 was. It'll be way down there. So much more bearish longer term. Okay, there, explain that right there. And what else do we have? Remain in sell rally mode, as we've been saying. It's a bear market. Surprises will be to the downside. Our second waves at multiple degrees of trend have held, so that is a good thing. So we'll see how this plays out here. And then let me get you guys to our monthly report that went to our annual subscribers, 233 a year. This deals with just what we did, the S&P cash. Just review all this here. There is the weekly with that trend line right up against it. We'll see if it holds. Okay, and then we get and you can see the symmetry between A and B, and 1 day difference in trading days for those. Okay, we'll get down to the S&P cash. Again, we've got the daily from that B wave high. We can go over those. You can see those counts there. There's our trigger. There's our targets. Hit within one of that target, right above the 4100 level. Very interesting. 4103 was our 1.618 and hit at 4104. Usually our targets are hit within just a point or two. Okay, and then we've got the NASDAQ here. It's a little more clean. Got the A down, the B up, and you can see the 1s and 2s at different degrees of trend there. Okay, and there's the wave C targets there for wave 3. Don't believe they're on the chart. Okay, again, the confirmation of the bearish count or primary count comes with a break of that wave A low above and eliminates the alternate count. We need to get a move below there to eliminate the blue alternate bearish count, which happened in the S&P 500 and is yet to happen in the NASDAQ. There's our targets there. There's our Dow chart. It's pretty clean. 1 up, 2 down. There's the wave 3 targets down there for the Dow. Within that, see that? That's a 1, 2, 1, 2, and 3 is there. It was hit, but we'll see if the 4 holds above that 1. But we've got wave 3 at least 2, if not 3 degrees of trend on the downside. Again, those can take any multiple they choose, 1.618 or higher. There's our targets for the Dow. Okay, you can see that actual was pretty darn close to the 1.618. So again, we're probably going to start dealing in 1.618, 2.618, and 3.618 multiples going forward. This third wave of at least 2, if not 3 degrees of trend keeps playing out. Okay. Here is the US Treasuries, the 10-year. Again, that came really close to a direct hit on our target for this 5th wave, which is completing the larger wave 3 in a circle. There's the wave 4 targets, and that is a review of that. I think that's, oh yeah, we've got gold here too. Okay, and there's the gold again. We're looking at a daily chart going back to 2015, a 1 up, a 2 down. We got a 3 up, we got a 4, then we're looking for a 5 to new all-time highs. See if that low holds there. It can go all the way down to 1614, but so far it's between the 50% and the 618. Okay, so that should do it. I think that is it. So let's move on up, and we'll leave you guys with that big picture look on the S&P Cash 500. Okay, that's it for now. Until next time. Take care, everyone.